Hello and welcome to another Elliott Wave Traders Classroom episode. This is Favio, and in today's lesson we'll go through a wave counting exercise. Let's try to label the charts together. I have selected two key levels. We have the low at 671 and the swing high at 66.91. So that's quite a decent rise. We're looking at the weekly log scale, considering the amount of return that this market has already yielded. So let's see whether the Robinhood has some more steam to go and make higher highs, or we have already entered a time-consuming correction. So first of all, we tend to look for sizable corrective pullbacks. And I can see that we've got a big consolidation here following the initial lunge. And the initial phase is always tough. And at this case, it looks like it's a leading diagonal of expanding variety. Considering that the market has already made higher highs, we have to count this as wave 1 or A, but we are in US stock. So let's just give the bulls the benefit of the doubt, since the aim is to progress over the years. So wave 1 here, followed by sideways correction. Wave 2 looks like a flat. Initial 3, followed by a 3 up, and 1, 2, 3, 4, 5. So we have 3, 3, 5, and that is a flat pattern. Is it a regular flat or a running flat or an expanding flat? It looks like a running. Why do you think it's a running flat and not a regular one? Well, because wave C here did not trade below the extreme of wave A. That gives us an irregular flat or running flat. We've got wave 1 as an expanding leading diagonal. So that's good too. 1, 2. And then let's count the extension in wave 3. Now, why not this is wave C, but wave 3? Well, if you apply the channeling technique, price action decisively above the upper boundary of the channel tends to indicate third wave presence. So we're going to look for extensions in wave 3, and let's get going with the counting here of wave 3 in red. Has it peaked yet or not? Well, it doesn't look like it is done. So we have here 1, 2, 3, 4, and 5. So that's wave 1 of 3. Okay, good. And then followed by an expanded flat in wave 2 of 3, which challenged the channel's upper boundary and found heavy support. The beat was strong. The market from there on rallied higher in an extended wave, which was wave 3 of 3. So that was a great time to be in the market. If you guys traded this, if you had some trades somewhere here around the 20, 30, it just doubled, tripled, and doubled. So that was a bit nuts. And then followed by a pullback, which was sharp. So in wave 2, we have a sideways correction. Wave B made a higher high. So we have an extreme here, higher extreme. So this is considered not sharp, even though wave C was quite dramatic. But we have alternation. The point is to look for alternation. We've got the alternation here between green 2 and green 4. We have in wave 4, I think this can be counted as double zigzag. Gonna take a look at the daily quickly, but it looks like a double zigzag here, followed on alternating with the expanded flat in wave 2. So I'm going to get rid of this base channel here. Running flat, let's just put the names of the corrections here in wave 2 at lower degree, expanded flat. And then we've got a double zigzag for wave 4. Double or simple, it looks like a double at quick glance here. We're at the weekly. So I think there is a high chance that we got a bottom in place in Hood and we've got a key level at 28.79. Chances are high that we're going to see another advance in wave 5 of 3 over the next weeks or months, whatever time it needs to achieve the goal. And the goal is trading 5 waves above 66.91. I'm going to expect heavy resistance at the prior. If this is IPO's high here, if my broker is okay using multiple waves, or if the high is all right, correct, then I'm going to expect heavy resistance right here, and it might coincide with a peak in wave 3. Now, let's just apply some extensions here, or Fibonacci ratios between green 5 and green 1. We tend to look for equality between 5 and 1. So let's just see where the equality is in log scale. And that gives us 88.37. And so let's color code it. So you know that we've got the target here for green wave 5 of 3. That's a decent target. It's calling for 100% growth from current level, and this market should continue to trade the remainder of wave 5 above the trend channel's lower boundary. So that's an important factor that you need to keep in mind. Wave 5 must not trade below the channel's lower boundary. Of course, it will negate the count if we trade below 28.79, as that is our line in the sand. But we get an early indication, or the flags get waved if you see breach of the channel's lower boundary. That might indicate two scenarios: wave 4 still unfolding, potential triangle. That's not going to go well with the alternation guideline. Or the count is wrong and we have a mega peak here and wave 1, for example, and the larger correction is underway. So that's why the channel's lower boundary is important when you're working with a fifth wave rally. So how do I expect this market to play out? Well, we want a pullback, ideally somewhere near the channel's lower boundary, or we've got extreme here, a lower extreme. I'm expecting the 40 handle to provide support, and then from there this market should get going again, extend in wave 305. So it looks quite bullish. The bearish scenario calls for example, how can we count this as a completed 5 waves up to 66.91? Well, you go wave 1, 2, 3, 4, 5. So let's just put the label here: 4, 3, 4, and wave 5. And that's done. This is a wave 1, higher degree. This was the first. Yes, if this is W, X and Y, then it means we've got wave A of a flat. We're still going to test the highs, or 90%. So A, B, and the market will come crashing below 28.79 again. I don't like this count for the main reason that if this is wave 4, then it's quite small and it does not alternate with the correction in wave 2. So we've got two flats, wave 4 smaller than wave 2. That's why I'm not considering this as a primary count. But if the market is going to trade below 28.71, then we will have to favor that this is wave 1 done cycle, and the market is correcting in a larger wave 2. But we're not going to cross that bridge until we see a breach of 28.79. If I can take a quick look at the daily chart here, so that's wave 66.91, that's the peak. And I was thinking that this is a double zigzag, and how can I count this a double zigzag? Let's get the label. I think this is 1, 2, 3, 4, 5, A, B, and C, W, X. A, B, and C, Y. So it counts best as a double zigzag rather than a simple zigzag. Where is the double zigzag? Okay, here. Okay, good. So this is our fourth wave from the weekly, the internals of wave 4, and we've got the A, B, C. I think we can go with A, B, and C right here. 1, 2, extended 3, a bit big wave 4 here, 5 for A, and then there you've got the second zigzag ABC, which is pretty clear. And the market has broken above the channel's upper boundary, so that's a corrective channel that I just drew here. Trading above the upper boundary indicates that either the entire correction has ended or first part of the correction has ended. So we have a 5-wave initial rally here, so that's bullish. Let's count that 2. Why not? 1, 2, 3, 4, and 5. So we've got an overlap between 4 and 5, I think. Let's just see the extended data as well. Maybe this wave 2 unfolded as an expanded flat, so I need to take a look at the 1-hour time frame. Yeah, if we got wave 1 here, or we don't have to do that, we have 1, 2, 3, 4, and 5, so wave 3 is up here, wave 4. I don't want to break the rule. The rule is pretty clear. Wave 4 doesn't overlap. So I don't want to go to 15 minutes time frame to see if this was wave 1 somewhere here, an expanded flat. But either way, we have an extension in wave 3, 4, and 5. Pretty much is clear now. I was looking at the 2-hour chart earlier. So that is 5 up. It gives us wave 1 of something higher. Either there's going to be wave 1 of 5 or not. Here we have also 5 up, 3 down, 5. So it looks like we've got wave 1 up here. And then this was wave 1, 2, 3, 4, and 5. Wave 2 is underway. I would not be surprised to get a slightly larger correction in this purple wave 2. Remember that this is a 2-hour chart. And if we trade somewhere around the 43 handle or 40 zone, so this zone, it's going to be an ideal pullback. So far, the market is stalling, pausing at the area of the previous 4th wave. And let me put the labels for this purple wave 1. And it's going to be a lower degree. Yeah, that's what happens when you don't use the automated version of the label. Okay. So we can count 5 up here. Corrective pullback will set the stage for a nice rally over the next few weeks. Here is what happened in Robinhood after that forecast. You can see that the Elliott waves helped to identify the rally that occurred. If you would like to get more lessons like this one, check out Trader's Classroom. You can click the link below or go to elliottwave.com.